Hello, I'm Judy Stiles. Thank you for joining us this week on Newsmakers. Well, the end of the year, the start of a new year, a lot of times people take a look at where we've been and where we're going. And one of the areas people talk about is the economy. And tied into that is the housing industry and home sales. And today we have a guest who is a local realtor who is now a president of the Missouri Realtors Association, Gary Nelson. Thank you for being here today.
Thank you for inviting me. I'm very glad to be here.
I know we've had a chance in the past. You've been a guest on the program, but you're kind of wearing a different hat now as the president of the Missouri Realtors. So I'm going to start off by explaining to our viewers what that means. What is that organization?
Well, the Missouri Realtors is the statewide organization. We're comprised of a little over 18,000 realtor members. Our headquarters are in Columbia, and as such, we represent all of the local boards all across the state, from Cape Girardeau to Kansas City, over to St. Louis, back down here, and all points around.
So the organization ties together really all the realtors around the state. You're kind of a unifying force for people.
We are. We try to coordinate some of the major activities, everything involving advocacy. We try to be a leading edge on that. We try to provide educational opportunities to increase the professionalism of the realtors, and we also work beyond that to the national level with national campaigns for anything that pertains to real property and protecting the public's interest in real property. We're not about just trying to be there to resolve issues for the realtors. We're there for the public, and many of the things we do are focused that way.
So as we're recording this program in Missouri, across the state line, there's another organization in Oklahoma and Kansas, Arkansas, all around us, all the state organizations working together.
It includes also, I was just at a national meeting, and the presidents of all of the states for next year were there. Included Puerto Rico, Guam, Virgin Islands. So we are everywhere we have territories, we have realtors.
Well, I know you have been involved in the real estate business for more than 20 years, your background?
About 23 years now I've been involved in the Joplin market.
So, and you know, a lot of people, they hear the term realtor. I know in the past, I think we've talked about the difference between calling someone a real estate agent and a realtor. So explain that, you know, the significance of the title.
The biggest single difference is to be designated as a realtor, you subscribe to a national code of ethics. And in that code of ethics, we self-govern. We have a process to go ahead and take care of problems that come up from the public. They have complaints against realtors. We are open to having them come forward. But as much as anything, it's a way for us to police within ourselves. And we do it through arbitration, through mediation, through subscribing to the code of ethics and its standards of practice.
So when you have a community like Joplin, where you have many perhaps agencies or companies, those realtors are still under the same umbrella as far as the ethics and the guidelines that they should follow.
Most definitely, and we're looking to, even going forward, a big incentive for the association nationally this coming year, and it's going to be a new code of excellence rather than the code of ethics. The ethics we've been subscribing to for a long time. The code of excellence is to try to increase the professionalism of each of our members so that they are better educated and are more in tune with really what their customers really expect to see out of the realtor.
Now, I know there's training, there's licensing to become a realtor. What about the continuing education once someone gets their license and so forth? They're keeping pace with what's happening in the business.
There's a 2-year requirement by the Missouri Real Estate Commission, which is a state organization appointed over time by the governor, kind of like a court. They're appointed for set terms, but until they have a new appointee designated to replace them by the governor who's in power at that time, they continue on. And from this area of the state, we actually have 2 members of the Real Estate Commission, Doris Carlin from the Keller Williams Agency in Joplin, and Steve Kinney with out of Neosho, Newton McDonald County, is a member of it.
So working together along those lines. And of course, you talked about statewide, we have regional organizations for realtors. There's a Joplin area organization that you work with, realtors work with.
There's 37 boards across the state, of which The Joplin area is pretty much Joplin, Carl Junction, Webb City, and some of the rural area. There's another one in Carthage, another one in Newton McDonald out of Neosho, and 5 County is up in Nevada. So yeah, we have a lot of different facilities for the members to become part of. And recently there was a move to create a regional multi-list system, and 7 of the boards across from West Plains all the way over to our area went together and created a shared service for the multi-list data. So if a client is working between here and Neosho, they can still work with the same realtor, and they'll have access to all the same data to provide just more of a one-stop shop for them, so they don't have to try to work with different people on different projects.
So technology has really played an impact on the
Technology
industry.
continues to make a huge, huge impact. Used to be that you would have somebody come to town, they'd seek out a real estate agent or a realtor and make contact and begin their search and depend on them to know everything.
Drive around town and look at all the houses they want to see.
In this day and age, 80% of the searching begins before the people ever get to the town through the national database that's available, and as well as lots of local ones. And there's hundreds, literally, of databases out there that you can find that'll give you information on real estate.
So do you find the consumer or the client is becoming more educated in that process as they come to you?
We have had people buy houses without ever coming to town. We've had a lot of people come with a short list. They've pre-screened, and because of the depth of the information that's available, they can see the interior of the house, they can see neighborhoods, they can get access to the bird's eye view from Google Maps and all kinds of other things. And it really has made the process more streamlined in many ways for them.
Tying all that together. Well, in your role as president of Missouri Realtors, people might be curious, well, what does that entail? Well, I know obviously you have meetings and so forth, but how do you describe your role in that position?
Well, for the year coming up, I become the official spokesperson for the association. So get a chance to visit with multimedia about items that come forward. If we have legislative issues that come up, I am put in the position at that point of speaking on behalf of the association for those issues. We try to get out into the various corners of the state throughout the year and attend their individual meetings to keep them updated on what's going on within the association. And in general, I'm just there to be of service. We do have 3 meetings statewide. Generally, we have one in January in Jeff City that is a legislative focus. Right. We have the second one this year is going to be in Kansas City, and then the third one is our fall meeting, and this coming year it'll be in Springfield. And at that time we install my successor. So actually, even though it starts January 1 and goes through the end of the year, by the time you get to the end of September, you're pretty much a lame duck.
You're ready to hand it on to the new person and so forth. Well, you mentioned the legislative session, and we're recording this program in December. January, legislature goes back to work, Missouri and elsewhere. But do you see some key issues facing lawmakers this year that tie into real estate?
Of course, everything that they look at anymore is budgetary. There's a huge amount of that. We're trying to work through the Missouri Real Estate Commission and then moving towards working with the legislature on reanalyzing our license law. It hasn't been totally revamped for a number of years, and because of technology, because of how we do business, and the practices of advertising and things that now have to include posts on Facebook and all of the various digital media. The rules that are out there weren't designed to really monitor.
They were pre-Facebook era, pre-website era.
Very, very much so. And so we feel it's time to work with them in doing a revision. And the Real Estate Commission's been very open to analyzing that. You know, they can get a consensus. It makes it so much easier to put it in place. A big thing that they changed within the last couple of years was every realtor now, before they can have a real estate license, and also real estate agents. Anybody that wants to sell real estate has to go through an extensive background check, including fingerprinting. So that if you're going to let them have access through a key box to your house, you want to know that they don't have any skeletons in the closet that can come to.
So background checks across the board for a lot of people.
For a lot of people.
What about on the national level? You know, I mean, obviously Washington's the next level up.
A lot of things happening at the national level. This last year we had two big issues. One was reestablishing the flood insurance for properties that do border or are in 100-year and less frequent floodplains. That had been expired December 31st of 13, and so there was a need to get that reestablished because there are constant needs for that.
People need that coverage, right?
And without the national government providing flood insurance, it was not something that the independent insurers were willing to take on. It's one thing that they wrote out of their contracts. So that's been reestablished. There's a new 3-year commitment there, and that's going to help. The only downside of that was because, again, of technology and the GPS pinpointing, they're able to now be much more exact in their mapping. And with that, properties that were constructed out of a floodplain and had been transferred by sale, all of a sudden now are in a floodplain.
So the map has changed a little bit on what is the floodplain.
Yes, and part of that, I mean, as we all know, the courses of rivers change, and so the map has to change.
Right.
But without the floodplain, without the flood insurance coming into play, there were people in that interim period that were being faced with the impossibility of selling their homes. They would see an annual insurance rate of $1,000 for a house expanded to be in excess of $7,000, and so
because of that line now taking in their property.
And the buyers would say, "That's not in our budget." You know,
Right.
We're stretching to get here. Mortgage interest deduction is under pressure from the federal government. That they're of course looking to revise tax laws and looking for income always, and because we do have a little bit of a deficit. And mortgage interest deduction is one thing that is constantly bring forward. And we, as a national and a state association, have a position that we will do anything we can to make sure that that is maintained for the benefit, again, of the general public, the homeowners. And we've been very successful in dealing with it. Yeah. One of our friends in the legislature, Mr. Billy Long, happens to be also a realtor. So he's very interested in what goes on in the real estate community and with his constituency. So he's an easy person to talk to about it. Right. A big issue coming forward is going to take effect in August of this next year, and that's the Dodd-Frank legislation, which was the overcorrection of the various entities that created our massive fallout with the mortgage problems that we had the last 3-4 years. And so instead of just taking a real close look at what went wrong and trying to stabilize it, they swung the pendulum 180 degrees. And the Dodd-Frank is going to have some very good provisions, but there's some things that are going to create some real interesting
So becoming too
challenges.
overprotective for the people?
They are. One of the provisions that's going to be taking effect is that when you buy a house, the lender will be required to get your closing statement to you of 3 full days before the closing. And right now it's supposed to be 24 hours, and sometimes we're lucky to see 6 hours.
Because of all the paperwork
Because of the paperwork
and
and everybody needing to get everything together. Well, with the 3 full days, that means if you want to close on a Friday, they have to get the document to you on Monday. So you have 3 full days, Tuesday, Wednesday, Thursday, to review it. And during that time, if anything changes outside of your being called up to military service or something very extreme, there is no adjusting to be done in it. If you went out and bought a car during that time frame, your credit score would change and the loan would not be able to go forward. And that can affect people, but it certainly doesn't affect them as much as if you're part of a domino effect where you're selling a house and buying a house, and that person's buying a house. If any one of those three change, all plans are put on hold.
Person A can't do it, person B can't follow
Nope.
through. Right?
And moving companies will be involved, and all kinds of nightmares will be coming into play. So we're hoping that they will look to fine-tune some of that. But that document and that legislation is such a huge document that last we were able to ascertain they were about 65% through the document and actually putting in practice that portion of it for education, for the lenders, the title companies. Everybody is affected by it.
Right. When you look at the real estate market, you're not only talking about people selling the homes, but you have the banks, everybody that's involved. There's a lot of people involved when a home is purchased.
Every time,
involved in tying that together.
most definitely.
Well, that kind of leads us to the Joplin situation. We're, of course, recording this program in Joplin. Regional people are probably curious, how are we looking now in this region as far as home sales?
Well, the one thing that you'll hear often, and it's very, very true, is that all real estate is local. So when you come to look at statistics and things, the national information you hear about a soaring market here, great home shortage there, that's a national trend. And you need to look at everything as what's really happening in our own backyard.
Where you're living, right.
Our market right now is about the same as it was pre-tornado. We had that big burst of demand right after the tornado, and we had that, what I call the California syndrome for a while, where people were actually bidding each other up to purchase a home, to be giving some
to just get a home to live in afterwards.
a home to live in, a place to settle for their families and to reestablish and start again. Since that time, our market was steady before the tornado. We've had a pretty consistent 2 to 5%, depending upon the year, growth in value of the homes. We never had a huge downturn. We had our share of bad loans that were made, so there were some foreclosures and things, but we were nowhere near the level of so many of the other areas of the country. The good side of that is, we also are very stable now. And the numbers of properties on the market, the number of properties selling each month, our average days on the market, as an overall group, are very, very similar to what they were just before the tornado. Our market is vital.
Right.
We are seeing right now a little bit of a shortage created. Our number of homes on the market in November of this year versus last year was down about 10%. So there aren't quite as many choices for the buyers, but still a wide assortment. The hottest area seems to be right now homes in the $100,000 to $120,000 range.
That's the price range.
That a number of homes that come available for qualifying for the JHAP funding fall into that range, which helps drive that. But when you go above that, in November, homes in the $200,000 to $300,000 price range, we had 122 of them on the market in Joplin, and we had sales in November of 5. Back in the day when I started in real estate, my first real estate book back then, not an online, but a printed book, had one home in the Joplin market that was listed at $250,000 or more.
So we're seeing more of the higher end homes in our community than we had.
We now have 55 homes on the market that are priced at $400,000 or more. So we have a home for everyone, and that's a good thing.
So it's really broadened the opportunities. You mentioned the JHAP programs, and let's mention that, and people probably have heard of that. Is that still available for people who want to, come back to Joplin or live in the community?
Most definitely. The JHAP program is targeted at reconstruction of the tornado zone, and they have a definite mapping of what houses qualify for it, first off. And a house, it can split in a block. It can be one side of a block and not. So
there's actually a map with a line.
There's a map with a line, and there's a separate commission within Joplin that oversees that. It is a program that's available based off of financial need, so you have to qualify based on your income level.
Right.
And at that point, you have two routes you can go. One is a 10% grant, and the other is a 20% grant up to $30,000. And that is available from the JHAP Foundation to be used for down payment or closing costs in the acquisition of a home. The difference in the two is that the 10% down has a 5-year requirement of living there without a recapture portion. The 20% has a 10-year.
Okay.
So if you decide, the purpose is to give stability, to get you into
rebuild
a home and
those
to hopefully
neighborhoods, have people
stay
back
there. But if you do see a need to transfer, sell a house, there is a possibility that you would have to pay a percentage of the net acquired from the sale of the house back to the program. So it's just another thing to be considering as you make that avenue available.
So people have those opportunities, that assistance to get into a home they may not have been able to get into. What about the interest rates? People might be wondering, well, is it still low interest rates to make it affordable?
Right now, rates still hover right around 4%. You might find any given time that they're a little under or a little over, but it's a great time to be getting into the housing market, to be looking to buy a home. We attended a national meeting not that long ago, and where one of the gentlemen had come here recently from Mexico at that point and was asked about the housing market, and he said he couldn't wait to get a house because he said obviously nobody came to America to be a renter. They would love to own their own property, and that's part of the American dream, and that's one thing that we hope to continue.
So helping those people with those low interest loans in the process of what they're going through. And we're looking at, we talked about the national scene, obviously. There's certain pockets of the country that have stronger economy and other ones that have weaker. So that when you see those national headlines on TV, you have to go back, as you said, to what's happening here. Because really, we're dealing with customers here when you're looking at selling a home.
Exactly. One thing that is out there that we have had some people here that are concerned about is also at the end of December last year, the Mortgage Debt Forgiveness Act expired. And that's a big thing because it affects everybody who does have to go through a short sale, a submission of deed in lieu, which is another way of stepping out of a home. You get an agreement with your lender that you can sign it back over to them and they'll accept it, and there's no legal process that goes beyond that. And then of course a full foreclosure. But in all of those cases right now, this year, people that had to experience those types of actions are in jeopardy at the end of the year of getting a 1099 from the lending institution. And if you owed $120,000 on a house and you sold it for $106,000, you could get a 1099 from them for $14,000 income.
You're going to have to pay some
You
money.
would then have to pay taxes on. So in our mind, as an association, it's adding insult to injury. It's not money that anybody ever.
It wasn't cash in hand, right?
If they had an option to avoid it, 99% of the people would have stayed in the house and been happy to continue living there. At this point, we're trying to get an action through Congress before they adjourn for the end of the year on the national level. The House this last week approved it by a 63% majority. We're just waiting now for the Senate to reinstall that provision for some period of time going forward, and we would like to see it become just an ongoing process.
Ongoing process instead of a time-like process.
It's phantom income. It's not something that they ever have attained.
Well, it's a means of the government getting some extra revenues in their perspective.
Well, the government's trying to really work with the individuals. They're more concerned about, I think, the constituents than they are about the big banks. And they don't want to see the lenders take a hit either, but it's just a paper trail, and nobody gains on it. So the government doesn't want to try to get a special windfall out of it either.
Right. Well, now, people are watching today, they might be wondering, where can I get some more information? I know your state organization has a website.
We have a website that is public facing for the majority of it. They can go to MissouriRealtor.org.
Okay.
And the national website is through Realtor.org. And on the national website, you can also go there and get information on every house that's on the multi-list across the nation from all realtors. There's 3 big providers of that information out there. There's Zillow, Trulia, and Realtor.com. Realtor.com is the only one that is fed on an ongoing basis in real time by the real estate community. And it's the only one that is maintained so that as properties sell, they come off. The data is 100% accurate, the same data you would get from
calling an agent.
And so if a person's going to do a search, Zillow and Trulia have a lot of bells and whistles, and there's a lot of other data that's available through some of them. I mean, if you wanted to go to a block that you were thinking of moving to, you could actually go to them, and they have the ability to provide you a link to find out who on that block contributed to the Republican Party, the Democrat Party.
So you can find the demographics of that neighborhood specifically.
You can find way more than most people want to know about when they're looking
potential
to just
neighbors,
buy
right?
the house. Yes.
Right.
So.
So a lot of information available, a lot of things happening as we head into the new year. Winter, of course, is the time people think about what's coming up in the spring. And I appreciate you visiting today and sharing some information for our audience and dealing with realtors.
I'm glad to do it. And hopefully it'll be of some value to somebody.
Great. Well, thank you very much.
Thank
and
you.
I'd like to thank you, the viewers, for joining us this week on Newsmakers. I'm Judy Stiles. I'll see you again next week at the same time on this station.